It's time for Watts on Wealth Radio with Barry Watts and your host, Ralph Hipp.
Resolutions are easy to make and easy to break, aren't they? And it's time to look ahead and think about practical goals for this new year. On this second Sunday of 2025, it's Watts on Wealth, featuring the wisdom of Barry Watts of the Wealth Care Corporation here in Springfield. We're going to talk about retirement resolutions that might make a difference for you. Hi, this is Barry's radio and TV host, Ralph Hipp, and if you could use some guidance on creating and then sticking to your financial goals, the number for you to take down in 2025 right now is 417-200-3500, so you can reach Barry and his Wealth Care team for some help. The first thing you can do to start the year is staying with us for this information-packed hour together. And hello, Barry, it's good to talk to you again.
Well, thank you, Ralph. It's good to talk with you and good to talk with our listeners. So welcome to another beautiful Sunday morning. You know, anytime you're on the right side of the turf, they say it's a beautiful day.
That's right.
So welcome to a beautiful day in the Missouri Ozarks. Glad to be with you on the show.
Well, here we are, another new year, Barry, and I've mentioned when we were chatting with each other, this is going to be a whopper of a new year, all kinds of things to happen in 2025. What's on your personal list of New Year's resolutions for this new year?
Well, Ralph, when you're talking about a whopper of a year and big things happening in 25, I couldn't help but think about what happens here on the 20th when we inaugurate a new president. By the way, I did get an invitation to the inauguration and I turned it down. Because I thought it over, and as much as I wanted to go, that invitation came from Congressman Burleson. As much as I wanted to go, I thought, my goodness, I'm going to be staying 100 and some miles out in the middle of Virginia. I'm going to have to drive that 100 and some miles to get into Washington. Have you driven in Washington? It's not something I like to do.
Nope.
There's going to be 500,000 of my closest friends trying to get in. We're still going to be seated 3/4 of a mile from the event. I can see it a lot better on TV. And oh, by the way, it'll probably be a negative 20 degrees. So I said, thanks so much. I really appreciate the invitation. And I do. And I would love to go. But the answer is no, I'm not going to do it. We'll let somebody else do it. And with the craziness that we've had here in the country from New Year's on, you know, the event down in New Orleans and then that crazy stuff out in Las Vegas, Lord knows what it's going to look like in Washington. I talked to somebody just the other day at the barber shop who happened to be in 2016, he was at the inauguration and he was sitting on the platform. So this tells you it was a guy who's kind of known in the community, although I'm sure most of our listeners wouldn't know who he is, but he's a big muckety muck in Republican circles. And he told me that it was kind of scary. He said just the way people were behaving. He said you had the sidewalks were covered with chain link fence on both sides. And he said people were yelling at him and cussing at him in a very derisive way just for walking to the inauguration. So that might be a good thing for you and me to just watch on television. Has nothing to do with your question, Ralph, but it was a great answer, you have to admit.
And anything else you can think of that doesn't have anything to do with President Trump or Washington?
Well, let's talk about resolutions. That's what you asked me about, okay? So the answer is no, I don't do resolutions. First of all, they're so dramatic. You know, I'm going to lose 100 pounds and become infinitely better looking next year. Well, yeah. What was the resolution last year? Oh, it was the same one, to just make the same one over and over and over. Resolutions are so dramatic, and I always fail at them. And so I just don't do the resolution thing. Now, I will tell you this. I do approach every year with kind of a fresh breath, saying, okay, I get a chance to be better this year and to do it over this year. And so one of the things I'm focusing on this year has to do with my work at the Wealth Care Corporation. And it is that I'm going to be doing less myself personally, less of the retirement planning, less of the client engagement, and I'm going to be spending more and more energy and time equipping my team of retirement designers and retirement advisors. You know, those are different categories in our firm. They have different responsibilities. So I'm going to be spending more time equipping them to do an even better job for our clients and giving them world-class retirement advice in a world that's always changing. Let me give you an example of how I'm doing that, Ralph. I just got back in Wednesday from my first trip of the year. I swore I was going to travel less, and here I am in the first full week of the year. I'm on the road again. But I got back in from my first trip. I attended a tax conference in January. Boy, now is that compelling and exciting or what? But the reason I did is there were things I wanted to learn, and I did learn a lot. I'll be sharing some of that on later episodes of our show. But I wanted to learn those things, and I bring them back, and I then teach them to our advisors so our advisors can communicate them to our clients and help them to save money on taxes as well. So I'm going to try to be sure that Barry is equipping people more and doing less of the work himself in the year ahead. I guess that would be my resolution if you have to call it one.
Well, that sounds marvelous, Barry. And to get started on your resolutions, hopefully with J. Barry Watts of the Wealth Care Corporation, once again, that number to call is 417-200-3500. And for 2025, they are open for business and ready to go. Well, millions of us do make some kinds of resolutions every year, Barry. A lot of us don't have any real hopes of achieving those. That's an annual tradition. And it's crazy. Researchers are suggesting less than 10% of us, around 9% of us who make New Year's resolutions actually complete them. And especially financially, Barry, how important is it for us to set goals that we can actually reach, that are actually attainable?
Well, it depends on whether you're serious about it or whether you're just being entertained by the fact it's New Year's and you ought to make a resolution. The very nature of a resolution is to be broken, I think. And therefore, I just don't like the concept. I remember one great resolution I made over 20 years ago. It was this, Ralph, I was going to be fit by 40. Fit by 40. Now, if anybody knew me at 45 and at 50, they'd say, hey, Barry, what happened to your resolution? Because I wasn't fit by 40. And in fact, 21 years later, I'm still probably not there, although I'm better today than I was then, although my body's 20 years older and it tells me about it a whole lot. So resolutions are just broken. I don't like to mess with them. I think it's important that we set out to do things that we really can accomplish. You know, I want to be a quintrillionaire. Is that even a thing? Well, you can make that resolution, but it's probably not going to happen. So let's not spend our time on things that we're not going to achieve. Let's focus instead on the things that we can achieve.
Right. And you could do that with a continuing resolution in Washington.
No, don't go there.
Oh.
You brought it up.
Oh.
You're the one who brought it up.
Blame me. Eric
That's
Burleson knows
another
what
way it's an ugly word.
Eric knows what we're
Washington
talking about.
just leaks into our show every time.
Oh, boy. Let's get away from that. How helpful is it, Barry? How helpful would it be to make financial New Year's resolutions as opposed to physical resolutions? Could we focus on resolutions that only deal with our financial future? Is that even possible?
Well, I think we could, and I think it's much easier. I think it's very helpful and much easier. It's the difference between being physically fit and being fiscally fit. Now, the problem with being physically fit is you have to have a lot of willpower, a lot of discipline, a lot of self-control. You've got to decide you're going to get healthy and physically fit. You've got to then pick the gym you're going to exercise at. You got to go to the gym. You've got to figure out what you're going to do. And then you've actually got to apply the muscles to do the process. And it just wears out really fast. Being fiscally fit is a whole different thing, because if you have a desire to start planning for retirement, Ralph, all you have to do is make the phone call. That is, you have to call us. And that ignites a process that we will drive, and you just have to show up for it. But we will take all the initiative in all the next things that you need to do, and we'll walk you through them, and we'll say, here's the next step, answer this question, show me this, help me with this. So I think becoming fiscally fit is a lot easier. Doing some retirement planning is an easier process. And I just have to say this, if you're not going to do it now, when are you going to get around to doing it? There are just so many excuses, reasons to delay. And truthfully, what's going to be different in 6 months or in a year? You just have to get started. And so many people at Wealth Care tell us that when we help them get started, how glad they are that they found us, how grateful they are for our guidance in the process, because we can take something that is kind of ominous and a big project and turn it down into, today you just need to answer 3 questions and move people gently through our 6 steps to retirement confidence process.
Now, to get started on the 6 steps, give Barry a call right away. Make that your first resolution at 417-200-3500, 417-200-3500 here in Springfield. Once we've started, it's easy to get motivated and feel great about that and feel confident. Then we get sidetracked as the year goes along. How do you act as an accountability partner, Barry, when you're helping somebody around the Ozarks work toward their financial goals and keep them on that track and not let them stray off their financial resolution, their fiscal resolution?
Ralph, all you have to do is agree to be responsive. That is your only requirement. So you have to say, yes, I will respond to you. When you ask a question, I will answer it. When you ask for a piece of information, I will hand you that piece of information. If you will do that, we will bring all the discipline to the process. You know, Ralph, over the years, I told you about trying to be fit by 40, and over the years, I've been a member of a lot of different gyms. That didn't help so much. A few years ago, I went and hired a trainer, and what I said to her, and she was extremely helpful to me, by the way. She specialized in seniors, and I now have achieved this, even though at that point I probably wasn't a senior yet. But therefore, she wasn't trying to make me buff, or trying to make me on the page of some fitness magazine or something like that. I remember I had a little hip problem, and the surgeon I was talking to, I mentioned to him my trainer, and his comment was, people your age shouldn't have trainers. Well, I disagree with him. He was thinking about, again, being on the front page of one of those fitness magazines, and I was talking about functionality. So when I hired this lady to train me, I went and talked to her, and I said, look, here's what I need. I said, I need you to tell me what to do. I need you to put the weight in my hand and tell me how many reps you want and what you want me to do. Because otherwise, if I walk into the gym, am I going to work on legs today, or am I going to work on shoulders and arms today? Or am I going to work on abs today? I don't know. And am I going to use 10 pounds of weight, or am I going to use 20 pounds of weight? I don't know. Am I going to use one of the machines, or am I going to use the weights? I'm lost. I just can't do it. But I can go to the gym, walk through the door, and they say, hi, Barry, and they hand me a weight, and they say, I want you to do 10 curls. I can do that. No problem. Tell me what's next. So it really works well for me when somebody else owns the process and the steps, and my responsibility is to just do what they told me. And we tried to turn that into how we manage people's fiscal fitness process through the Wealth Care Corporation. We'll tell you everything you have to do. We'll tell you every step you have to take. We'll watch you take those steps. We'll guide you through those steps. It's really pretty easy. All you have to do is sink down in a comfortable chair and participate in the questions that we ask, and let us walk you through the process.
Right. And please do that. Once again, it's 417-200-3500. I was thinking as you were talking, when we go to the gym, I think, the physical fitness and hopefully the money part of it is one of your resolutions. I was thinking about when you rotate to the abs or the legs or the chest or whatever. When you get with Barry, you could rotate between the income streams. Where's my income coming from? You could focus on, rotate to your retirement accounts, rotate to estate and legacy planning, rotate to all those areas, and have Barry give you a workout on all those parts. What happens when we're pretty darn good about it, Barry, but how do you help somebody make adjustments to their retirement plan when life just throws us a curveball this year?
Well, it's really interesting that you had that analogy, Ralph, because we actually do have it broken into 6 different processes that you rotate among. And so I had never made that analogy in my own mind, but that is exactly how it works. Here's the deal about curveballs. Life is going to throw us curveballs. We have to be prepared. The question is, does the curveball change the end result? Or are you still on the path? What path, you say? Well, the path to being able to retire at whatever age you said you wanted to, with the amount of money that you said you wanted to. And do you have enough money that'll last you all the way to age 100? And we figure that out. And then when you come back in a few months and say, oops, curveball, I got laid off. Well, the first thing we do is we go back to our plan and we say, well, okay, if you're laid off and now you're retiring today instead of in 3 years when you plan to retire, does it change anything about the end result? Or do you still have plenty of money to last you all the way to age 100? See, that was a curveball, wasn't a very big deal along the way. Now, there are curveballs that can be big things, like health can be a massive curveball. You could get your health thrown at you today that totally changes everything. So we have to build that into the process. There are other things, though, that are small curveballs, like economic issues. Like, what if the stock market drops? Okay, what if it does? What if tax rates are increased? Okay, what if they are? And the only reason I say what if is because we have planned for our clients to avoid that particular problem. And so we build all these what if scenarios to deal with the curveballs, Ralph. And as a general rule, most of our clients navigate curveballs really smoothly along the way. And that's the way that we encourage people to do it. So if you don't have a plan that's built to take curveballs, I'd say you don't have a plan.
Well, get those 6 steps to retirement confidence going for you. And Barry, thanks for your information on that. Hope you're working on your New Year's resolutions and hopefully getting some help from J. Barry Watts and take that first step right away. It's 417-200-3500. Barry and I are going to talk about Bitcoin as we take a pause here and go to our next topic. You're listening to Watts on Wealth right here on the radio with Barry Watts. I'm Ralph Hipp, and we will be right back after this.
Are questions about your financial future, such as, have I saved enough, or will my money last, keeping you up at night? Reach out to Barry Watts by texting VISIT to 417-200-3500. Again, that's text the word VISIT to 417-200-3500 to schedule your consultation today. Do you think you'll pay lower taxes in retirement? Really? Many people go into retirement assuming that, but end up paying as much, if not more, in taxes than when they were working. How taxes can affect your retirement is one of the chapters in Watts on Wealth, the latest book written by local tax strategist and retirement designer Barry Watts of the WealthCare Corporation. Barry takes you through the many tax considerations you should make before you retire. To get your free copy of Watts on Wealth, the book, call 417-200-3500 or go to wattswealth.com. The book is full of actionable retirement tips and strategies Barry has gathered from his more than 30-year career in helping families just like yours retire successfully. Get your free copy of Watts on Wealth, the book, now by calling 417-200-3500 or go to wattswealth.com. Advisory services provided through WealthCare Asset Management, LLC. Life is full of uncertainties, but your retirement plan should not be one of them. Don't let market fluctuations dictate your future. Contact Barry Watts to secure your retirement today at 417-200-3500. Again, that's 417-200-3500.
Welcome back into this Sunday's Watts on Wealth, and today in this second part of the show, we're getting into Bitcoin. I know. If you're like most Americans and Ozarkers, it's not something you're very familiar with. Maybe what you have heard makes it sound scary. The value of Bitcoin is on the rise. Is it real? And might we have some retirees wondering if there's still some time to get into it if it's in alignment with your goals? Barry will tell us what's been going on with this cryptocurrency, what you might want to know about it, define it, and ways to decide if you're interested in it. Barry, as we talk about Bitcoin and cryptocurrency, incoming President Trump seems to be very big on high tech and on Bitcoin. J.D. Vance got him well connected with some of the Silicon Valley high-tech people who were supporting him. He said, well, I may help you out when I get in office, and he may smooth the road to some very good days on cryptocurrency. With that in mind, too, what you've read and what you've seen, what's going on with the value of Bitcoin in 2025?
Well, why don't you ask me some other profound question that I have to get the answer out of my crystal ball? I mean, I don't know what's going to happen to Bitcoin in 2025. Certainly these things like Trump saying he's thinking about creating a Bitcoin reserve and so forth, certainly that ought to bolster or support the price of Bitcoin. But in terms of telling you what's going to happen in 2025, I don't have the first clue. And anybody who tells you that they know for sure, I think is being a little bit facetious with you. We just don't try to make prognostications on things like that we don't have a basis
now,
for.
And that's good to know. Said, well, this is not something we can solidly predict, and we need to have that information. Yeah.
Well, that's exactly right, Ralph. We try to stick to the things that we do know about and that are very solid. Let me give you some examples of things related to Bitcoin that I think are important. First of all, I should tell you that I do personally own some Bitcoin. Now, not a whole lot. In fact, if all my Bitcoin went to zero tomorrow, wouldn't affect my life or my future at all. So there's the first lesson. Things that are like Bitcoin, let's not own enough of them that it really makes a difference. Of course, if Bitcoin shoots the moon, I won't get to participate into nearly that great degree. Pretty much the only reason I own Bitcoin is because my clients ask about it from time to time. And I wanted to speak about it with some measure of credibility because I could say, well, at least I own some, so I know kind of what it's done, and that keeps me paying attention. Here's the thing you've got to really realize. When we make investments for people, we're always investing in companies that do something. They manufacture something, we invest in an auto manufacturer. We invest in a mining company that actually mines ore out of the ground. We invest in a company that distributes medical products or something like that. And the thing about Bitcoin is Bitcoin doesn't make anything. Bitcoin is just a medium of exchange. It's not based on doing anything. Originally, up until the Nixon administration in the 1970s, we're looking back now 50 years, Ralph, the dollar, the United States dollar, was actually based on gold. That was called the gold standard. So you could actually take a dollar and exchange that dollar and get a dollar's worth of gold out of it. Now, Nixon took us off of the gold standard. There are people who think that was a great mistake, and that'd be an interesting research project if you were going back to grad school. I certainly kind of tend to think it may have been a mistake because now our dollar isn't based on anything. And in the same way, Bitcoin isn't based on anything. And so that means an investment, at least in Bitcoin, is purely speculative. It's not an investment. Let me give you an example of an investment. When you buy stock in O'Reilly Automotive, I'm not telling you should or you shouldn't, but they certainly are good corporate citizens here in Springfield, Missouri. When you buy stock in O'Reilly Automotive, you actually own a little bitty piece of every store that you see. That belongs to you because you're one of the shareholders in that company. And so you've got an investment in something that's physical, something that's tangible, something that you can see, and oh, by the way, something you understand, because most all of us shop at O'Reilly from time to time for various auto parts and things to make our cars more pleasant or cleaner or better or whatever it happens to be. O'Reilly is an investment. When you buy Bitcoin, that is a speculative gamble. All you're doing is putting your money on BC and hoping BC goes UP. You're hoping that it goes up. So it's no different than going to the casino and picking red or green or black or going to the horse races and pick a horse. It's gambling. Now, one other thing I want to say to you, Ralph, people will often talk about how, well, the stock market is a gamble. Horse feathers. That's not how the stock market works at all. When you buy, as I said, O'Reilly Automotive, you're not gambling. You're buying a piece of a business. And again, I'm not telling you to buy O'Reilly or not to buy O'Reilly. I'm just telling you, when you buy that or Walmart, you're buying a piece of a business that's got stores across America that's selling product and is profitable from doing that. When you speculate on something just hoping it goes up, that is a gamble. And the stock market is not that. While the stock market may go up and down, I reject the notion that investing in stocks is gambling. It's investing in something that has some fluctuation in value, but it's not a gamble if it's done properly. So I just think it's important to consider that.
Very good, sir. Bitcoin sure looks like it's a young person's game. And, when we think of, for me, I have a vision of it's like a video game that I don't know how to play. It's a young person's game. Do you think that people in the retirement phase of their lives ought to be jumping in to join this value boom you're talking about?
Well, Ralph, I'm in the retirement phase. I'm not actually in the phase because I haven't retired, but I'm in the retirement age. I could be retired. I like working, like what I'm doing. So why would I want to bother with retiring at this stage of the game? But I own some Bitcoin. So I think it's okay to have some if it interests you for whatever reason, but I don't think you should feel compelled to have Bitcoin. I don't think you should worry about it. I think you can do just fine and have a fabulous retirement, a very profitable and well financially sound retirement without having any Bitcoin in your life. And yet for the younger people, I think it's perfectly fine to focus a little more on Bitcoin and how it works. You just need to really understand that notion that Bitcoin is not based on producing a product. It's just based on the hope that other people will think it's more valuable than you do, so they will drive the price up. That's what you're hoping for. And we like to say at the Wealthcare Corporation, hope is not a strategy.
It is not. If you're interested in this with what Barry knows, ask him a few questions of your own about cryptocurrency and Bitcoin. Get together with Barry this new year, 2025, and that phone number, 417-200-3500 for Barry Watts and the Wealthcare Corporation. Glad you're with us on our Sunday radio show. So, Barry, you're describing Bitcoin as a It's, a medium of exchange, a speculative venture. Can cryptocurrency be as risky as some people believe it is and they say it is?
Well, yes, it absolutely can be. When you talk about crypto, you think of instability. The price goes up, the price goes down, and Bitcoin is certainly no exception to that. In 2022, for example, now that was a year that was kind of bad for investments overall, because if you owned the stock market, the S&P 500, it was down by about 19% that year. But in 2022, if you owned Bitcoin, it was down 60% that year. Now think about your retirement account. Maybe you were down 20%, hopefully not, but maybe you were down 20% and it hurt. How much more would it hurt if you'd have been down 60%? Well, it would have hurt a lot. What would you have done? You might have said, get me out. I can't afford to lose any more. And what a mistake that would be, because today Bitcoin is back up to $97,000 per coin. It's worth more than it ever has been before. So fluctuation is a big deal with something like Bitcoin or any of the cryptocurrencies. And another word for fluctuation is volatility, and another word for volatility is risk. Because if you get on the wrong side of that, upside down or downside up, and you get in or out at the wrong time, it can really destroy your retirement. And so we just don't think it's something that fits for most retirees.
Barry, what are some other facts that you do know about cryptocurrency and Bitcoin that retirees may want to keep in mind? I know one thing is when you invest in it, it does not pay dividends, does it?
Well, that's exactly right. Now, not all companies pay dividends, because some companies are taking what they would have paid out in a dividend and they're reinvesting it in developing the company further, and that's a good sign. Some companies don't pay dividends because they aren't making any money, so they don't have a dividend to pay. That's not such a positive sign. But Bitcoin doesn't have any hope of ever paying dividends because, again, they're not doing anything to make money. The only way you make money in Bitcoin is if somebody decides they'll pay you more for it than you paid. So the price of Bitcoin went up, and it's not based on anything. And so I think that's a great problem. And some people will say, well, but I think we should have some Bitcoin just to diversify. Okay, if you want to go there, that's fine. But recent research suggests that stock and Bitcoin prices are correlated. That means they move in the same direction. And you just have to keep in mind that Bitcoin isn't creating a product. It's even just nothing more than a payment method, a medium of exchange. And its use is extremely limited. When's the last time you paid a bill with Bitcoin? Oh, I haven't ever before. Well, exactly. You pay a bill with dollars. And so you're not even using it yourself. Why would you invest in something you aren't using? I sound probably more negative on Bitcoin than I am. Actually, remember, Ralph, I said that I actually own some Bitcoin. But I just want to be aware that we're talking to retirees. Retirees are who we help. And Bitcoin is no place for a retiree to have any significant amount of their capital invested. And will that cost us money? Well, yes, this year it has cost us money because Bitcoin shot the moon. But guess what? We're not in the shoot the moon business. We're in the having plenty of retirement income till you get to be age 100 and you die business. And we want to be sure you've got that income. We're not interested in making a big return on something that's highly speculative.
So whether to maybe dabble in it or avoid it, and give Barry a call and have a discussion, and do include Bitcoin and cryptocurrencies in your discussion, and you'll be totally up to date here in this new year. Time for us to take a break, a little bit of news, and you're listening to Watts on Wealth, the radio show. This is Ralph Hipp with Barry Watts, and with you. We'll take a break and be back in just a couple of minutes here. Don't go away.
Worried about whether your savings will see you through retirement? If you're asking yourself questions like, have I saved enough, or will my retirement last? It's time to talk with Barry Watts. Simply text VISIT to 417-200-3500. That's text VISIT to 417-200-3500 and arrange your visit today. Life is full of uncertainties, but your retirement plan should not be one of them. Don't let market fluctuations dictate your future. Contact Barry Watts to secure your retirement today at 417-200-3500. Again, that's 417-200-3500.
All right, well, you followed your assignment beautifully. You're staying here with us for the full hour of Watts on Wealth, the radio show. Ralph Hipp here, along with J. Barry Watts of the Wealth Care Corporation, right there at 65 Battlefield Road, and it's 417-200-3500. Barry, being a news guy, and I've noticed toward the end of the year, when we get that final couple of weeks of December, we always lose and see the passing of a major star in their field. We lost Jimmy Carter on December the 29th. He did live to be 100. I'm sure his financial planning was well taken care of. And Jimmy Carter, a great man of faith and a guy who really is going to be best remembered for all his work for Habitat for Humanity and giving where others cannot suffer but have a blessing. What are your thoughts on the life of Jimmy Carter, his life of faith in particular?
I have mixed emotions. Jimmy Carter was a Southern Baptist originally, and I too grew up in Southern Baptist life and really have held to many Baptist theological tenets. Now, in more recent years, Jimmy tended to drift away from some specific teachings of the Bible on some social issues in our country. And people lauded him for that and for his great expression of being like Jesus. Well, when you drift away from what the Bible teaches, I don't know that we can say you're being like Jesus. So I have friends who say that Jimmy Carter wasn't a Christian. I won't go there because I'm not qualified to answer that question, and I'm not in charge of making that particular decision. I have friends who laud Jimmy, and certainly I will say this, he seemed to live out much of the ethic of behavior in terms of how Jesus lived to what we know and what Jesus taught. So that's a good thing. Let's say it this way. Jimmy's faith was front and center. He kept it out there. It was a part of who he was. And I think that is really, 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 really good. In fact, I would hope that people would say that about me. And somewhat I hear that from them from time to time because it's the most important thing to me. My relationship with Christ is the supreme thing to me. It's what I'm hanging all of my eternity on. And if you don't have the confidence of your eternity because you don't understand what I'm talking about, if you call that number Ralph gives you and say, I don't want to talk about money, but I'd like to talk about Jesus, Barry will meet with you to talk about that too.
Sure.
Because the confidence it gives me to face the future, knowing where I'm going and knowing in whose hand my future is incredibly important to me. And I think Carter exemplified not only some life of Jesus things, but he seemed to exemplify that confidence. And I think that's an awfully good thing. So I'm not going to be picky and critical of Jimmy. No. He wasn't a really great president.
No,
I remember that
a lot of us agree on that. Yeah.
Well, and he, his presidency was really a setup for all the things he did after his presidency, and more power to him. So certainly he was quite a character, and I think we would be well off if we had more Jimmy Carters in the world.
Well, we've talked about things that we know, and we do venture into the unknown. And boy, this year is going to be a lot of unknowns. We have particularly 4 retirement unknowns we'd like to get through for the rest of our show. I bet it's happened a lot to you in the last 20 years that you just didn't see it coming from 2005 until now. You probably had some unexpected blessings of your own and some obstacles to get over that you didn't see coming. Either way, we're going to talk about the big unknowns in the past, and they will continue in the future. Barry, what would you term as some of the big unknowns when we get to retirement?
Well, it's interesting, Ralph, because Kelly and I are dealing with these unknowns right now ourselves personally. Just this past week, we had a little time where we could sit down and just kind of talk about our personal finances and look at what our personal retirement was like. And Kelly defers all that to me, of course. And I want her to be involved, so I make her come sit down and I show her everything, show her the numbers and show her the math and show her the files and where they are and all those kinds of things, because I want her to not be totally clueless if I was to escape the earth tomorrow. But I think the things that all of us have to deal with are, first of all, longevity. How long you're going to live is going to be an issue, and most of us are going to live longer than we expected to. You know, my dad's dad died at 65. My dad is going strong at 82. Seeing 95 is quite possible. The second one is healthcare costs, because that's not going to get any cheaper, I don't think. And how can we control that? It's something I try to talk to Congressman Burleson about as often as possible, and I can't really get attention like I would like, because I think that's something that he could contribute the weight of his office to influencing healthcare availability in Southwest Missouri, and I'm trying to convince him of that. I think the performance of the markets over time, what's going to happen over the next 10 or 15 or 20 years in the markets? Is it always going to be like it has been? And there's some really big questions to answer there. And then taxes. What's going to happen with taxes? I think it's a good thing that we've got the opportunity to pay some tax now, get it out of our system so that when taxes go up in the future, and I think they're likely to, we won't have to be victim by rising tax rates. So those are some of the biggest unknowns that I think are going to come our way that we need to develop strategies to deal with.
And I don't know if President Carter had a pretty good vision long ago. He would live to be 100. It is possible, as we have seen. How long we will live is that first unknown. We don't know how long we'll be around, how long we'll live in retirement. Retirement could go 30 to 35 years in some cases. And so basically, Barry, how do we know if we've saved enough money for all that?
Well, it's really simple, Ralph. We've broken this process down into 6 steps. We call the 6 steps to retirement confidence, because we want people to retire not uncertain, but we want them to retire with a great sense of confidence that everything's going to be okay. And if it's not going to be okay, maybe you're not ready to retire. So the first of those 6 steps is lifetime retirement income to age 100. Don't get hung up on age 100. Although Jimmy made it, you might. The point is, do you have enough money that you will be able to have the income that you want every year going forward from the time you retire until the time that you die? Lifetime income to age 100. So the way you deal with longevity is making sure you've got enough income. Now, if you live short and you die at 67, obviously that's probably not going to be a very big issue. But if you live to be 87 or 97, it could become an issue because inflation is going to keep creeping in there and eating away, eroding the purchasing power of your income. And we need to know, do you have enough income and do you have enough growth built into your investments so that you will keep up with the rising cost of living every year during your retirement? So that's the first step. It's really a simple process because we do it every day, so we know how to do it. But if you don't do this every day, I could see where it'd be really intimidating to you.
Would you want to know, friends, let me ask you on this Sunday morning, would you want to know the date that's going to be on your headstone? Would you want to know that the day you're going to pass, or just leave that as an unknown and to be planning for that? Let's plan for it, however long you're here, 85, 95, or live to be 100, and get with Barry. And it's 417-200-3500. The number easy to remember, easy to dial, 417-200-3500 to Barry at the WealthCare Corporation. We've talked about these numbers where a lot of us might expect to spend over $300,000 after we pay our taxes on healthcare costs in retirement. The other unknown we have, the figures are rising all the time. That's an unknown. How do you help us plan for that, Barry?
Well, first, you need to realize you must plan for it because you may not wind up needing a lot of health care in your latter years because you may not have any latter years. You're talking about Jimmy Carter, who lived to be 100. Jimmy's daddy died when he was 60. Now, Jimmy's mama lived to be 85. But Jimmy lived all the way to be 100. So the question is, how long will you live in retirement? And the older that number is, the more chance that healthcare is going to become an active part of your retirement spending. In fact, this is a big deal to all of us. Just this past weekend, as I was sitting talking with Kelly about our own financials, she asked me the question, what happens if something happens to you? What happens if you have to go into long-term care? And I was able to show her, here's the plan for how we would pay for that. And here's how it would work. And so when we're building out a retirement income plan, one of the things that we do, Ralph, is we develop stress tests. And we say, okay, if everything is normal, here's what it looks like. But what if we're stressed by one partner or the other partner dying early? And that changes your tax bracket. That changes the income you receive because one of the Social Security checks will go away. Does that affect the other partner financially? We do the same thing with long-term care. If you go into a long-term care situation, are you going to run out of money, the surviving partner, earlier? And so we can stress test all of these things, and then we can protect against the things that we need to protect against, long-term care being one of those. And so you just have to know how to handle it, Ralph. Most people, it's not that they're not willing, it's that they don't know how to think about it, and that is frustrating and intimidating. So they say, well, I'm just not going to get involved, and I'm just going to wait and let happen what happens. And maybe you just go to the nursing home and there's enough money saved up to pay for your care, but then you leave your spouse older, worn out, and destitute. Mm-hmm. And I think that is a horrible crime against the person that you pledged to love, honor, and cherish.
To make sure that doesn't happen, Barry, do we plan for healthy and long-term care on two different tracks? And how do you estimate the expense of each one of those, especially the long-term care part of it?
Well, that's exactly what we do, Ralph, is we plan not only for health, but also for sickness. And then we plan for both spouses' sickness if it's a married couple. So what happens if the husband gets sick? How does it affect the wife? What happens if the wife gets sick? How does it affect the husband? We're talking financially and economically now. In terms of what it costs, you have to realize that, I can just tell you my grandmother, Mama Ernestine Cox from Stone County, she died 8 years ago. And when she died, we had her in Elfindale here in Springfield, and we're paying $10,000 a month 8 years ago for Mama to get care. Now, the government says you can get it for $7,000 a month in 417 land, whatever. I'm just telling you, Mama, it was $10,000 a month. And so if you imagine that inflating at 5% per year, that means that 20 years later, $10,000 a month becomes $26,000 a month. So the fact is, by the time you and I get to long-term care age, Ralph, and have to go into some sort of care facility, it's going to cost a lot of money, and we can't just hide our head in the sand. So here's the frustrating thing to me. It frustrates me when people just don't pay attention to this because they're so stressed by it, so upset by it, and they don't know how to think about it. We know how to think about it. This is what we do every day. Let us help you. We've got solutions, but I can't give you the solution if you don't pick up the phone and call me. So if you'll call me, we'll run your income through these stress tests we talk about. We'll show you some long-term care solutions. We'll show you how to stretch your income to make it last longer by paying less in taxes over time. This is what we do for the people who come to us at the Wealth Care Corporation, and we'd be happy to do it for you if you'll just pick up the phone and dial the number.
And you've got to be saying, friends, this beautiful Sunday morning, that sounds fantastic. We've got to work on this and got to get started on that and do it at 417-200-3500, 417 all around the Ozarks, 200-3500. Let me ask you this, our friends listening in. Can you draw a solid bead on what's going to happen in the market into your accounts November and December of 2025? There's no way we could do that. It's impossible to predict whether the markets will be up or down or sideways. How can you plan, with Barry's help, handling all the variables? We'll talk to that as we get to the fourth and final part of our show, Watts on Wealth, in just a moment.
The pace of inflation may change, but it never disappears. How might it affect your retirement nest egg? Get the answers by calling Barry Watts at 417-200-3500. Once more, that's 417-200-3500. Do you think you'll pay lower taxes in retirement? Really? Many people go into retirement assuming that, but end up paying as much, if not more, in taxes than when they were working. How taxes can affect your retirement is one of the chapters in Watts on Wealth, the latest book written by local tax strategist and retirement designer Barry Watts of the Wealth Care Corporation. Barry takes you through the many tax considerations you should make before you retire. To get your free copy of Watts on Wealth, the book, call 417-200-3500 or go to wattswealth.com. The book is full of actionable retirement tips and strategies Barry has gathered from his more than 30-year career in helping families just like yours retire successfully. Get your free copy of Watts on Wealth, the book, now by calling 417-200-3500 or go to wattswealth.com. Advisory services provided through Wealthcare Asset Management, LLC. If you're pondering the longevity of your retirement savings with questions like, is my nest egg sufficient? Or how long will my retirement funds last? Consider scheduling a session with Barry Watts. Text VISIT to 417-200-3500. Again, that's text VISIT to 417-200-3500 now to set up your appointment.
Hey, going into our break there, I said it's just impossible for us to predict whether the markets are going to be up or down or which way they're going to go in 2025, one of the big four unknowns we're talking about as we get to the final part of our hour. And can we build a plan for good markets and bad markets and everything in between, Mr. Barry Watts?
Well, absolutely, Ralph. I mean, that's what we do, is help people anticipate normal markets, knowing that there is no such thing as normal. It's going to change. And some years it's going to change for the better. That's this past year that we just experienced. And somewhere not too far down the road, we'll have a year that is toe curling and blood curdling when it changes for the worse. And we have to build those plans into our planning, build those years into our planning. And if we can still have money, the money that we need, no matter whether we enter a really difficult economic season or a prosperous economic season, then that is a successful retirement plan.
Now, what are the things you can help us do with the Wealth Care Corporation to help reduce our risk in the market, Barry?
Well, Ralph, there are a couple of things. First of all, not all your money should be in the market, I don't believe. We should have, for every retiree, a portion of their money set aside in what we call protected principal. That's principal that may participate in an earnings rate that is tied in the stock market in some way, but has a floor on it where you can't lose the principal amount that you have invested. So there should be a protected principal in your life. Second thing, you need to look at your investments and consider whether they're optimized to protect you from down markets. For example, we use a process that is based on supply and demand. When the markets are in demand, we want to be in them. And when the markets go out of demand, and therefore into oversupply, we don't want to be in the market. We actually go to cash. And there'll be people who'll argue and say, you can't do that. It's not effective. Okay, thanks for your information. I'm just telling you that's what we do, and it works very well for us and for our clients. So you need to be sure that whoever's managing your money has an optimization strategy for down markets. And most people don't have that. Now, they may give you some double talk answer about, well, we'll go to bonds. How'd that work the last time when interest rates started to rise and bonds started losing value? That's not a strategy, I'll tell you, that you should use to offset market risk. So these are just some important things that you need to know about, and you need to realize that you don't have to be a victim to falling stock markets. You're going to be impacted by them to some degree, but you don't have to be victimized by them. And we develop strategies that help our retired clients avoid that victimization.
We've done whole shows on this, Barry. How does having a plan help us avoid those emotional decisions we make when things get rocky and rough in the economy and the stock market?
You know, Ralph, I'm 61. It's kind of funny. I don't like to drive as much anymore as I used to. When Kelly and I were first married, I always drove. She never drove. If I was in the car, I was driving the car. And somewhere, I don't know, 4 or 5 years ago, I just started letting Kelly drive. And more often than not, when you see us out and about today, Kelly will be driving. When I go into a big city, for example, I was in Raleigh, North Carolina this past week. If I go into a big city and I have to rent a car and drive, I find it tensing. You know, it's like, I don't know the roads. I don't know where I'm going to go. I've got to be paying attention. I'm driving a different car. That just drives me nuts. I love it when they meet me at the bottom of the escalator at the airport with a little sign that says Watts on it. And they say, Mr. Watts, follow me. Let me take your bag. Follow me.
Great?
And I just follow the guy out, get in the car, and they just whisk me to wherever I'm going to go. That's what I love. And we try to provide that client, that service to our clients. We do the driving for you. And so we'll show you how our process works. And our process is designed to reduce all the reasons that you should worry. And then we do the driving. You don't have to figure out, should I be in the market or out of the market today? We figure that out for you. You don't have to make a decision about what to do based on that, because we're going to make those decisions for you. And then the other thing we do is communicate. We have some annual conferences where we invite our clients in and we just talk to them about what's going on in the economy and the markets. Each week, our clients receive a newsletter from us talking about what happened in the markets this particular week. If you'd like that newsletter, you contact our office and just tell them you want to be put on the newsletter list. They'll be happy to just add you to the newsletter list so you hear about those kinds of things. So we're talking to our clients multiple times a year and actually sitting down with them once or twice a year to go over how their investments performed. I just did that with my dad this past week while we were off. And let's just say the 82-year-old man did really well last year. Mm-hmm. And it was exciting to show him those numbers because they were beyond outstanding. And so it's just fun when people don't have to worry about those things. They don't have to be trying to make those decisions. They can let somebody else do the driving. There was somebody, was it Greyhound, that used to say, leave the driving to us?
I was just thinking about that. Leave the driving to us.
I don't know who that
Who
was,
had
but
that?
that's what you
Yeah.
do when you come to the Wealth Care Corporation. You leave the financial driving to us. It's our job. And we do it very, very, very well.
That's what he does, folks. At 417-200-3500, 200-3500. Not far away. He's right here in Springfield. We've also brought this up. We're going to revisit this topic, which we've mentioned on previous shows, Barry, what I call the year of the window. We are very close to the second Trump term and the tax changes that we've talked about many times on the show. Tax changes planned for January 1 of 2026. Now, less than a year from now. We have no idea, as we discuss retirement unknowns, no idea what our tax policy will be in place when we get to retirement. What do we need to be doing now in what I call this year of the window to plan for taxes in the future?
Well, Ralph, I think a better question than even that one is this. What is your advisor doing to help you with taxes? You know, we're on the 12th day of the new year. Actually, we're 7 working days into the new year, and I just spent 3 of those 7 working days at a tax conference where I was learning how to better help my clients. And we don't just go to those conferences. We actually bring the tools and the strategies and the concepts that we learn and discover back to help our clients along the way. So my question is, what is your financial advisor, your retirement advisor, your stockbroker, the person who manages your money, what are they doing to help you with taxes? Because if they don't have some strategies to save you significant money, I'm talking hundreds of thousands of dollars in most cases. If they don't have, you say, well, I don't spend hundreds of thousands, Barry. No, but if you'll just add up what you spend and do that every year for the rest of your retirement, you're going to spend hundreds of thousands on taxes. So let's save some of that. Let's cut that back and let's either give that money to you to spend on whatever you want, or let's leave that money for your family. And your heirs, leave more to them. Don't send it to the knuckleheads in Washington, D.C. and let them do stupid things with it. So that's an important part of how we ought to think about planning for taxes in the future. And right now in 2025, we've got one more opportunity to save taxes before tax rates go up in 26. And the law as it is currently written says that tax rates will go up in 2026.
So with the 1 year or maybe the 4, the window of opportunity to make some changes, keeping our taxes lower in retirement, and the Roth conversion, is that at the head of the list, Barry? The final year to possibly do that?
Well, there are a lot of things I like more than Roth conversions just because they make a bigger dent. But a Roth conversion is just table stakes. Everybody should be looking at and considering Roth conversions. And people say, well, you know, I don't know how to think about that. I know you don't. That's why you need an advisor who does tax strategy work. And sometimes what we tell our clients is after we do the math, we say, you know, a Roth conversion isn't going to help you. You should not do a Roth conversion. But more often than not, we tell them Roth conversions are very valuable to them. And they'll still be valuable, I think, in 2026. The point is they'll cost you more money in 2026 because tax rates are going to go up. So if we could get something on sale, why wouldn't we buy it today? And what you can buy today is more of your government for less money by doing this in 2025 while tax rates are lower. So I think doing Roth conversions is an excellent idea right now, Ralph, and it's one of the strategies that I would introduce. But there are other solutions that we bring to the table from time to time as well.
Barry Watts, thanks so much for all your great information. We've learned a lot of the 4 retirement unknowns, and knowing a little bit can help us deal with those unknowns, and we sure appreciate it. Also, to get a copy of Barry's book, just text the word book, BOOK, to 417-200-3500 here in Springfield for a copy of the book, which is also called Watts on Wealth. Watch for Barry and me on TV. We're on all the channels in 2025, here and there and everywhere on Channel 3, 10, 33, all of them there. But if you're listening to the radio, reading the book, watching TV, you're going to be well-versed on what Barry is sharing with us, his wisdom on Watts on Wealth. Barry, any final words for our friends out there?
Ralph, we're off to a great start this year. Shortly, we'll have a new president in place. I'm looking forward to that. I think there may be some rough water just because change sometimes brings drama. And I think there will be some people who try to stand in the way of what Trump hopes to accomplish. I won't be one of them. I'll be 100% for him. And I think that we have a bright future now in what's going to happen in America going forward. And we need to be sure Republicans deliver, hold their feet to the fire, make sure they do that. And then let's just look forward to the blessing of a prosperous America. That's the world that you and I grew up in. And as I look over the horizon, it occurs to me that just maybe it may be morning in America again.
Oh, all right. And on that thought, we'll close, Barry. Thanks for joining us, friends, for Watts on Wealth, and we will move forward with our next show on our next beautiful Sunday morning together. Bye for now.
Thank you for stopping by Watts on Wealth. If you would like Barry and his team to help you make a plan to get to and through retirement, or would simply like a second opinion on your current plan, give us a call today at 417-200-3500. That's 417-200-3500. And join us again next week for Watts on Wealth.
WealthCare Corporation provides tax strategy, tax compliance, accounting, and insurance services through its affiliate American Tax Strategies, LLC. Investment advisory services are provided by WealthCare Asset Management, LLC, an SEC-registered investment advisor. Investing involves risk, including the potential loss of principal. Past performance never guarantees future results. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying abilities of the issuing carrier. This radio show is intended for information and entertainment purposes only and should not be used as the basis for personal financial decisions without first consulting a qualified advisor. The information and opinions you've heard are believed reliable but cannot be guaranteed as to accuracy and completeness.